What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, Tesla, Nvidia, and Meta. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly what to watch as far as critical levels. Now, combined with these critical levels, we're going to talk about some key events that are happening this week. There's a lot to unpack, so let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles. So first things first, last week we ended the week just below the 50-day moving average. The 50-day moving average is this yellow line that you see on our chart. It may be a different color on your chart depending on your own settings, but the 50-day moving average is a key level because institutional buyers, including people on Wall Street, they use that level to gauge if the market is right now in control by the buyers or the sellers. Right now we're flirting with that level. You can see that we've attempted to break below it, tried to recover above it, and now we're trading back below it. So this level has been a support level for us throughout this entire year. You can see that we have not broken below this level ever since we moved back above it in March. Since then, it has been carrying us up until the last few months. You can see that things got a little shaky. Now, this is not uncommon or abnormal for August and September to be a little bit more volatile than the remainder of the months. Historically speaking, August and September are definitely more volatile. Now, last week we were driven down largely by Apple's big downturn. This was after China announced that they will be banning iPhone use for their government officials. You can see that it wiped $200 billion in market cap on Apple in just a couple of days. So that is definitely a significant event that happened, and it took Apple back down near its earnings lows that took place last earnings. So we won't get into Apple's levels just yet. Let's talk about SPY's levels first and a couple things that are happening this week. SPY back on the daily candles. Of course, the first thing to watch, as we mentioned earlier, is going to be that 50-day moving average. Buyers want to see the stock trading above that level, or the index in this case, in order to regain any kind of confidence. But if you're looking at even a shorter term chart for SPY, let's see the hourly here, you want SPY to trade back above 453.70 in order for buyers to regain full control and full confidence. Anywhere below that is going to place us at a point in which we can easily get rejected back down. Just a quick overview on volume down here. You can see that there's definitely more red volume than there is green, which means that sellers are indeed controlling the short-term trend. Even if we move back above 448.60, it's not going to be good enough. We need to be back above that 453.70 mark because that was the biggest rejection that we saw in recent history, and that took place on September 1st. To the downside, sellers are looking to break the 440 mark. 440 to 440.80, roughly that level, is a critical level because if we look back, this is a point in which we consolidated for multiple hours and multiple days even before we were able to get back above it. You can see that there was a large point of consolidation. We refused to move below that level, and so if we do move below that level, then it can be a sharp fall back down towards 435 to 436, and below that level it can even go to 432 to 433. So those are as far as the short-term levels on SPY. Just remember that SPY is a product of the overall market. It doesn't drive the market by itself. So when SPY goes up or down, it usually means that technology stocks, because they make up a large portion of the market, are also going up and down with it. In a bear market or in a sell-off market, we typically see things moving down altogether. And so if SPY is selling off, it's likely that all the markets are selling off altogether across the different sectors. So now let's get into some things that are happening this week that can drive us up or down before we jump into our watch list and talk about the technical analysis here. First things first, last week we saw the Fed's Beige Book that was released, and it highlighted the Fed's willingness to raise rates further if needed. Many members were optimistic that inflation is indeed cooling down, but this week we will get a very important report that will give us an exact update. The CPI report is expected this week, and you can see that the CPI report has been coming down month over month, except from June to July. From June to July, we jumped from 3% to 3.2%. The Fed's inflation target is 2% and lower, so they will keep raising rates until they hit that 2% mark. This week's inflation report is extremely important because you can see that we have been coming down month over month. And if there is a track of multiple months in a row where inflation starts going back up, we are almost guaranteed that the Fed will raise rates again. The Federal Reserve is expected to hold their FOMC meeting next week, so not this week, but next week. So if we see that uptick in inflation, it almost guarantees that interest rates will go up even higher. Now, another major report that's happening this week is going to be the US retail sales. They are a key number to watch because retail sales show you what consumers are doing on the front line. So if consumers are spending, this is a good sign that there's activity in the economy, but the more that consumers spend, the more likely that inflation will keep going up, because the whole idea of raising interest rates is to discourage people from spending. That way they can lower inflation. Last but not least, Apple is expected to hold their keynote presentation this week, and we'll talk about that as soon as we get into Apple's stock. So let's go ahead and get started by first talking about our watch list, and we're going to start with Meta. Now, Meta, just like SPY, and you're going to see this trend across many companies right now, it's trading right at its 50-day moving average. It's not even fair to say that it's trading above it or below it here in this case, because you can see that this battle has been going on for weeks. And the reason why we're covering Meta this week, we usually cover Amazon on our watch list, but the reason why is because when a stock takes this long consolidating, there is going to be a big move coming. Now, right now, it's not easy to tell which way that move will come, but we do have some levels for you that you can watch in order to gauge where that move goes. First things first, the biggest support that Meta has here right now is the 292 mark. Below that level, then sellers can take control. Now notice we did trade below that 50-day moving average on Friday, but there are those 10 and 20-day moving averages right below. So if Meta does break below 292.15 in this case, then it will place it also below the 10 and 20-day moving averages, which are these blue and purple lines. So if we do see Meta break that level, then we can potentially take a short or a put position down towards the 285 to 286 mark. And below 285.80, it can be a very sharp move down towards 276 to 277. Now, these price targets are aggressive, so don't expect Meta to hit those this week. It very much could, but it doesn't mean that it will. So anytime you're taking a swing, especially for options, you want to give yourself a few weeks on expiration. That way you can let the stock breathe and consolidate as it needs to. Things don't move sharply up or down all the time. Sometimes it takes a few weeks for the stock to actually reach target after it breaks a support or breaks above a resistance. Now, in terms of a resistance to the upside, Meta, first of all, will need to break above 307.90 to gain some kind of bullish footing, but that's not enough. Buyers want to see Meta move above 312.35 for it to start moving towards that 318 to 319 target. Now, 318.40 is a very critical resistance, and the reason why is because you can see that Meta got rejected at this point 3 times. 1, 2, and 3. Anytime you see a stock get rejected at a level more than once, that's either called a double top or a triple top. Those are extremely hard to recover from, but once they are recovered from, one thing is for sure, buyers are now willing to pay a price that they were not willing to pay at 3 different times at 3 different tests. So if buyers are willing to pay a price above 318.40, you know that they're back in control and they can easily take Meta towards that 325 to 326 price target. Now, if someone did ask us, how do we get these levels on our charts? What are we doing to get these boxes? These are all manually drawn, you guys. There is no indicator that gives you this, at least to this accuracy. So we go in, we find these points of rejection, and we place our resistance and support points. We draw these resistance out manually for you, and then we draw the green and the red areas where things can get very bullish or very bearish. The next stock on our watch list is going to be Nvidia. Now, Nvidia is trading just above its 50-day moving average. You can see that it almost broke below that level multiple times in the last few weeks, but buyers were quick to recover the stock up. Nvidia is one of the strongest names on the market right now, but it is definitely worth noting that Nvidia's relative strength, which is the RSI here, you can see in this case, most of the time when traders watch the RSI, they're watching for overbought or oversold levels. Something that's very important to note about the RSI is what it stands for. RSI stands for Relative Strength Index, and it measures the strength of a move. You can see that when Nvidia made this move, also, although it broke above its all-time highs, its RSI was still trading below 70, which is called a negative divergence. You can see that RSI here was strong and RSI here was weak. So in this case, you know that there was not enough relative strength on this breakout to be able to carry the stock higher, especially when you combine that with strong selling volume. You almost have two things telling you that there's not enough strength to be carried forward. Now, in terms of the shorter term charts on Nvidia, if you are looking for a bullish move, you first want Nvidia to move back above 471.60 to regain that bullish footing. Above that level, Nvidia does have a strong bullish price target of around 488 to 489, and then after that, the second price target would be around 500. To the downside, if Nvidia breaks below 440, then it could be a very sharp move back down towards 416 to 418. Again, these are aggressive price targets, you guys, so don't expect Nvidia and all these stocks to hit these price targets this week. It may take a few weeks. Now, speaking of those few weeks, you have to remember that in a couple weeks, on the 19th, I believe, the FOMC meeting is happening. So if you are swinging anything through the FOMC meeting where the Feds decide interest rates, make sure that you're giving yourself even more time, because FOMC historically drives markets up and down very strongly. So if you are swinging anything for the next few weeks, you have to keep that FOMC meeting in mind, because it may move markets against the direction that you're favoring, and it may crush your premium on those calls and puts. The next stock on our watches is going to be Tesla. Now, Tesla is trading right around that 50-day moving average. You see how when SPY is doing something, almost all stocks are doing the same thing, especially tech stocks. So you can see Tesla attempted that break back above the 50-day moving average on Friday, got rejected, and closed just below its 10-day moving average. And this goes to show, by the way, how important it is for you to keep your time frames in mind. Most people always ask, what time frame should I watch? It's always important to understand what's happening on major time frames like the daily candles and the hourly candles, because you may see things that you don't see on the minute or the 5-minute candles. For example, if you were trading Tesla on the minute or the 5-minute candles, you may not have seen that there is a 50-day moving average in its way on the daily candles. So you want to get an idea of what's going on the overall picture. So when you are analyzing a stock, you want to start from the macro time frame and move into the micro time frames, which is why we always start with the daily candles. Now, as far as Tesla's hourly candles go, the first resistance in its way is going to be 264.80. If Tesla can move back above that level, it will place it back above the 50-day moving average, and it will place it above this entire consolidation range. You can see that Tesla has been getting rejected right around that 260 to 261 mark, but the strongest rejection came right here, where you can see Tesla got rejected around 264 and then got sold off for the weeks to follow. So the stronger the rejection, or the stronger the sell-off that comes after the rejection, the more significant that resistance becomes. So if Tesla can move back above 264.80, then it places it back in a more confidently bullish mark, and then it can go towards that 272 to 274 price target. Now, to the downside, if Tesla does move below 242, it can see 235 as the next price target back down, and then 228 would be after to follow. The next stock on our watches is going to be AMD. AMD has been trading roughly in the same range for multiple weeks now. One of the more frustrating stocks for sure, because it has not been very consistent. You can see it's also trading right around that 50-day moving average. It's also around the 10, 20, and the 100-day moving average. So on the daily, there's a lot going on, which makes AMD more of a day trade type stock than it is a swing trade type stock, just because there's so much uncertainty happening in this stock right now. So if we're looking at AMD on the shorter term time frame, first of all, we want to see it break back above 113.95 in order to regain some kind of bullish footing. The reason why we chose 113.95 is because AMD has been rejected at that level multiple times, 1, 2, and you can see that there was rejection right around 112 as well. So back above 113.95 places AMD in a more bullish favorable range, and then it can start clawing its way back towards 120 to 121. Now if AMD doesn't do that and it fails to move back above that level and it comes down to 104.50, it can come down towards that $100 mark, and 100 is a very strong psychological support. Buyers do not want to see AMD to break below that level. If it does, then it can move towards that 93 to 94 downside price target. Last but not least, the final stock on our watches is going to be Apple. Now, before we get into Apple, we have to talk about their keynote presentation that's expected on Tuesday. Apple is expected to announce the iPhone 15, which is supposed to be exciting, but historically speaking, recent keynote events, these are keynote events that they hold annually to announce new products, they have not been bringing that much excitement to investors. And you can even see it reflecting in Apple's sales. This is the third quarter in a row you can see that Apple's sales and profitability comes down. And that's simply because people are holding on to their devices longer, whether it's the iPhone or the MacBook, because there's not that much excitement around innovation. And yes, we will give them the benefit of the doubt. It is hard for them to innovate something that's already so innovative. But still, investors want to see some kind of breakthrough technology for them to get excited again and for buyers to rush to those stores again and buy all those new gadgets. So Apple's keynote is expected on Tuesday, and while Apple remains dominant, you got to remember what happened last week. There is a cold economic war happening between the US and China. The US banning TikTok on some devices. China is now banning iPhone use for government officials. So that is a pretty big deal that has further implications than just the iPhone ban. If there's the iPhone ban in China for government officials, you got to remember there's a lot of production for the iPhone in China as well. So if China decides to make another chess move that can hurt Apple, that can seriously damage the stock's profitability and cause a lot of uncertainty. So this is much more deeper, or much deeper than just an iPhone ban for government officials that can just kind of tiny bit hurt the stock. It has further implications to follow. So Apple on the daily, we can see that Apple is trading below almost all its healthy moving averages. Apple, after its last earnings, already suffered. Investors were already uncertain. They did not like to see that sales growth declining. And even on its attempt back up, Apple got rejected strongly at that 190 mark. And you can see that big downside move. Here are some key levels to watch on Apple. First things first, you have to talk about the 100-day moving average in this case, because before we can even talk about these short-term levels, anywhere below that 100-day moving average, which is this gray line on our chart right here, Apple is in trouble. It needs to move back above that level in order for buyers to regain confidence, which is why our buying resistance would be above 184.30. Yes, long-term and fundamentally, Apple is a very strong, healthy company. We have an entire group dedicated to long-term positions. We take advantage of these big downside moves to add to our positions. However, short-term, if you're looking to day trade or swing the stock, right now, sellers are in control, and they will remain as so unless Apple moves back above 184.30. Now, if Apple can move back above 184.30, then it can regain that buying confidence and it can start clawing its way back towards 188 to 190. 190 is a very strong resistance because you can see this was the strongest level of rejection before Apple got shot back down. So if Apple can move back above 190, that is great news, and we will talk about further levels in our next videos. So make sure you subscribe and look out for our next videos to update you on all these levels. To the downside, Apple has a strong support at 172. If Apple moves below that support, then it has two other supports at 170, and the downside price target below 170 is around 167 to 168. So that's all we have for you guys. I hope you guys found this video helpful. Thank you so much for checking in, and best of luck on the week ahead.